Margin trading allows individuals to borrow funds to trade more than their actual capital, with the requirement of having some collateral, such as cash, stablecoin, or crypto, in their account. For instance, with $100, a position worth $200 can be opened using 2x leverage. However, there are risks involved, as gains and losses are magnified. If a trade goes against the individual, they can lose all their cash. To enable margin trading on the exchange, one must log into their account, click on the trade option, and then select the spot option. On the TradeSpot page, they need to go to the right side of the screen, find the order form, and enable the margin trading option, accepting the terms and conditions if it's their first time. Key terms to understand include wallet balance, which is the total cash or crypto in the account, and available margin, which is the amount that can be used to open new margin trades. Effective leverage is the ratio of the position size to the cash. For example, having $1,000 in the account and a $2,000 position is equivalent to 2x leverage. Wallet health is also important, as it shows how close the individual is to a margin call, which is a warning that their losses are growing, or liquidation, which automatically sells their positions to cover losses. If the wallet balance drops below the loan value, the exchange will send a margin call alert and liquidate the positions to prevent debt. To use margin trading while trading, one can simply click on the leverage option on the order form section and change the leverage cap, which is set to 3x by default but can be changed to 2x, 3x, 4x, 5x, or 20x. The individual can then select the leverage according to their needs, confirm, and enter the price, using the slider bar to choose how much they want to borrow. If they are trading above their wallet balance, the remaining balance from their margin account will be used. The amount used and available margin can be seen in the wallet details section at the bottom of the order form section. Managing the loan is also important, and this can be done by reducing leverage, paying off the loan, depositing USDT or selling crypto, or selling part of the position, which automatically pays back the borrowed amount. The loan can also be paid back with deposits, such as bank deposits, crypto wallets, or profits from trades. By understanding and using margin trading effectively, individuals can make the most of their trading experience on the exchange.